Welcome back. The question on everybody's mind is this a good time to invest in gold? Now, gold has stood the test of time, and nobody knows better than Indians. In fact, in the last 100 years, gold has given an 8% compounded returns in rupee terms. Recently, spot gold topped 50,000. In fact, it has gone to the extent of very close to 54,000 on the MCX as uncertainties still continue to persist with rising COVID-19 cases. In fact, in India, you find that the cases are now surpassing 50,000 per day, which is quite substantial. So, gold has been rising substantially in the last 1 year after a lull of 6 years. Central banks have been resorting to money printing at different times. The incremental money supply of the central banks who are printing currency notes can fuel inflation and appreciation of real assets such as real estate and gold. Whereas real estate is struggling with its legacy issues and also with very poor demand in the context of people losing jobs and job cuts, yet we have been seeing that gold has been rising rather substantially this year. In fact, very good rise, and no wonder that the government of India has come out with different tranches of sovereign gold bonds. Liquidity is an issue, and you have to consider that so much of money being printed by the central banks is only fueling, and the question is how long this can go on. Now, let us put the things in perspective. Many financial advisors and suddenly, everybody and his brother has now cropped up saying that at least 5% of your portfolio should definitely be in gold, and even 10 to 20% if you want to take advantage of the gold rally, because the uncertainties around the COVID-19 cases is here to stay and is not going to go away in a jiffy. That's what you hear from most people. Now, this is true. Well, but has gold gone up substantially, or is it something which is here to stay? Gold bonds, as you know, are the government securities, and they are denominated in grams of gold, and they are basically a substitute of holding physical gold. So the government of India in March had decided to come up with 6 tranches of gold bond issues. The 5th one is starting tomorrow and it will end this Friday itself. Now the issue is being priced at 5,334 rupees per gram. And those who, however, apply online will get a discount of 50 rupees. So that's good. And people have been thinking, well, gold has surged 37% this year, and the prices are close to 54,000 per 10 grams. So let us join the party. Let's go and have some fun. And while businesses are not doing well, maybe gold will compensate and we can make some good money. So that's the context. And I would like to, however, point out that you must view every investment in perspective. You will find that gold had hit an all-time high of $1,900 a troy ounce, roughly where it is today in mid-2012. Okay, and in rupee terms, returns were 5% per annum in 6 years. After that, gold fell around 45% between August 2012 and December 2016. 45% fall in the price of gold between August 2012 and December 2016 is not a small fall in the price of gold, which goes to show that gold is not forever. You can say that diamonds are forever, but gold is not forever. In any event, these gold bonds which are being issued, the sovereign gold bonds issue which is coming out by the government of India, is for an 8-year period. It has a 2.5% interest rate, and when you redeem it, then the government takes the redemption price to be equivalent to the 999 purity level price per gram of gold, average of the last 3 days before the date of redemption. and the price is as declared by the Indian Bullion Jewelry Association Limited, which is fair enough. It has a lock-in period of 5 years, and after 5 years there's an exit option. You can, however, if you're holding the sovereign gold bonds in a demat form, you can also sell it on the exchanges in the demat form. So there is liquidity provided, but yet if somebody is not holding it in demat form and wants liquidity, then another option is to go for the exchange traded funds. So you can go for the gold exchange traded funds, and that's another good option. The crucial thing in the whole exercise is what will be the price of gold down the road. Today is so far so good. Is this going to continue forever, that you invest and you realize that 2 years down the road, or as I just gave you the example that gold had fallen 45% between 2012 and 16. What if it falls that much again? So you cannot just be like those, just people who come on television and say at least 5%, at least 10%, at least 15% should compulsorily be allocated to gold. And what if it falls 45%? You'll go and catch this guy. Anyway, in all humility and putting the whole thing in context, I believe that gold has done very, very well, and there would be some more run up till September for sure, September of 2020. But although the gold may continue some more rise till December and little bit into the next year, but I believe that a very sharp rise that we are seeing in the price of gold would have run itself out by I would say September sometime this year, also by November. And you may continue to see rise in the gold, but it will slow down. And definitely, I would say sometime next year in 2021, you could see a severe battering in the price of gold, especially towards the middle of 2021. So it's not as simple as just coming out and saying, oh, have a compulsory allocation of 5% or compulsory allocation of 10%. Definitely, it should be a part of everybody's portfolio. What about this fall? What about a 45% fall that came between 2012 and 16, as I just explained? You have to be cautious and understand that. But yes, if you're looking at a very short term, very short haul, gold has a great future. But be careful. The medium to long term definitely has certain risks. Next year, I believe in the middle, you'll see a good knock and a good fall that may come in. As far as the rise is concerned, yes, over the next 1.5 2 months should be decent. This is to the best of my knowledge and ability. You can also use your own judgment and analysis. There are many factors which are weighing. Do not forget the fact that price of gold is determined by many things. One is the international price. Second is the currency exchange, the rupee value vis-a-vis the dollar, and third is the demand. Indian demand comes a lot from the wedding season, which has been curbed due to the COVID-19 cases. And you find that the international price also doing well in the times of uncertainty. But should this uncertainty increase very much, then you will find that people may be using gold to sell gold and to convert it into cash, to utilize the cash for the emergency and for the difficult times ahead. So this is also likelihood which should start playing itself out in some period of time. So be particularly careful towards the end of this year, 2020. But definitely the rally has steam at least till September 2020. Beyond that, as I've explained to you, yet it will slow down till December, but it will keep rallying. However, October may be a down month though, but November, December, you'll see the rally continue. And next year, definitely, I would say the steam would go down. It may lose more steam, and towards the middle of 2021, definitely a good correction in gold prices is on the cards. This is to the best of my judgment, analysis. Please do your own homework before investing. This is how I feel about the gold as we go forward. I know it's an important asset class, and I know that my analysis is something many look forward to. I hope that I'm thankful to all my viewers and all the participants in the Art of Investing course for all the encouragement and enthusiasm that you guys have shown over the years. And we hope to keep coming up with more interesting for for the knowledge of everyone. If you desire more in-depth analysis, please feel free to subscribe to my channel. And also, if you'd like to be a part of the Art of Investing program, then you can also WhatsApp me on 982 086 1044. Thanks. Happy investing.